MansaX, which is one of the greatest names behind the Standard Investment Bank, has slowly, by the way, become a giant in investment. And if there is one company to watch out for, this is that company right here. That is basically changing how people invest and is now the third largest collective investment scheme in Kenya. Even though MansaX has only been around for a few years, walianza 2019. So what made them grow this fast and how did they become number 3, by the way? According to the just released CMA collective investment results for Q1 of 2025, it shows that SIB, which is the company behind MansaX, grew from 41.69 billion as at the end of December 2024 to close at 56.84 billion. And that is a growth of 36% in just 3 months. Yani between January and March, individual Kenyans, machama, corporates na pia foreigners wameongeza a whooping 15.15 billion plus into MansaX. There must be a reason why, and let's look at the secrets many Kenyans don't know about MansaX. MansaX is a special fund managed by Standard Investment Bank yenye ilikuwa launched in January 2019 hapa Kenya. It was the first fund, by the way, to be licensed by the Kenyan market regulator CMA as a special fund, kwa hiyo special fund category yenye inasaidia investors to diversify their portfolios beyond the local markets, including investing kwa global stock exchanges. Up until then, most of the available funds zilikuwa kwa hizi collective investment schemes were basically the money market funds, the balanced funds, kina bond funds, alafu na pia equity funds, yes? This is what was available under the unit trusts, where you don't have to figure out ni wapi you will send your money, but just choose your risk level and the goal and deposit and let the fund manager do their thing. High returns at this point, by the way, was not a usual thing, but a once in a while occurrence yenye ulikuwa unaipata kwa vitu kama equity funds and perhaps a little on the balanced funds. And this, of course, was as a result of limited options in terms of markets, whereby if stocks in the country are doing bad, then the equity fund investors pia wao mambo inachemuka on their end, yes? Some will lose into negatives and wanatiwa moyo, unaambiwa ati guys, this is only paper loss, yes? Invest more like Warren Buffett, you know, to enjoy the compound interest wonder of the world and all those other short stories. So if you didn't have a lever strong enough to handle these ups and downs, then you had to settle for the less risky options like in money market funds and the bond funds, whose return was a little bit low, but then your capital at least eco preserved. So then MansaX now comes in at a time when people are starting to open up to investments, but are looking for a better way to earn more with some little some minimum risk. And that's where SIB struck the right nerve with a solution that was offering people what they needed, a mix of return and on this other hand, security. So MansaX became the first registered special fund that came up with an out-of-the-box strategy, which was new in the market. Like, honestly, it was a new concept. This new strategy would combine high diversification, caution, limitless opportunities, and pia came up with a multi-approach. Yes, that meant that security and return is achieved with a very good balance in between. So while equities make money when markets are on the positive and lose when it is the vice versa, MansaX, on the other hand, came up with a plan that makes money for you when the market is going up and when it is also going down, through what those who have attempted vitu kama forex trading refer to as long and short selling, okay? The diversification is so wide, by the way, that even if one of the vehicle hit a loss, the rest will recover it because it's a very minute portion. And then when they take a trade, they apply what's known as stop losses. This is a strategy which does something like this. If the market goes in the right direction, in the direction that I chose, we make a profit. But if it goes the opposite direction, I automatically get stopped out of that trade to avoid me losing more money. Then to maximize returns, they trade in world markets, which offer them a 24-hour cycle to make money across different markets. A trade that they have really perfected well from the results that we have seen since their inception. Kenyans now, so unajua ni wajanja, yes? You come up na new strategy ama new product, so huwa they give you time, yeah, to prove yourself. Ati wacha tuone wewe kwa exhibits mwaka moja, waone vile kunaenda, at times miaka mbili, and all the time wanawachia wale marisk taker uwanja wa enjoy. But after seeing the results, they are ready to give you a try. The team behind MansaX, by the way, has also ensured professional management. Like, for real, it was not until the other day, I think mid last year, that they started reporting as a collective investment scheme to the regulator. And by that point, they were already past the 30 billion shilling mark. But all the years before that, they still self-regulated with professionalism and never put their clients' money at risk. If they still could self-regulate very well wakiwa on their own, what about when the regulator is on their radar? Zile anaangalia. The other place they have done well is in good education and updates. They have been very transparent, in my opinion, on where they are investing and why, which ensures that as one of the investors, you can actually go through the journey informed and aware of what's going on with your money. There are several places to improve, as I said in the last video. Kama hujai watch, I'll leave the link below. But so far, so good in educating and keeping the investor up to tabs. And last but not least, consistency has been the best medicine for the naysayers. Although past performance doesn't guarantee future results, it's still the best indicator to help make decisions when you wish to put your money somewhere as an investment. I have had a few things that people say, things like special funds have high management fees or capital is not preserved. Okay. I agree with you totally. However, this management fee story is just but an excuse. I'm sorry. But what do I mean? Imagine a management fee is how these fund managers make the money, is how they are, that is why they're in business. This is how you pay them to work for you, because they are working for you. I don't know where you get this strength to imagine that there should be a fund manager somewhere who would just let you enjoy free service or take mediocre fees for their service. I don't know. And wait a minute, did you know that the returns that you get is net of management fees? As in, by the time you get your 18%, they have already deducted their fees. Yani ishatolewa tayari. So even if they took 10%, for example, of course they don't take that, but then wakupatie 20% return. Isn't that still okay for you, since you were sleeping while they were working, and they gave you back all your deposit ile nyolieka plus an extra 20% on top? If you believe you can make that 20% or the 20 plus the management fee of 5 or 10 by yourself, then please don't let someone work for you. Go ahead, make yourself rich with pleasure, na hakuna mtu atakula hata shilingi yako. Ama vipi? Anyway, all these little things together with more others, yes, is what has made this fund become one of the giants. And yes, you can confidently invest and grow your money. By the way, you can catch the other reviews that I've done on MansaX. Then I've gone into depth on how they operate, and I will leave the links below to help you with that. And remember, I have a team at SIB to help answer your questions. Audience yangu amwezi mkakorogeka, and to help you start your journey. And all you need to do is to go to moneyversations.co.ke/MansaX, and you'll start there. And anytime that you're stuck, I will be here to help you, because I'm the one that sent you there. So which is the other great company that we should talk about? I'ma do a review about. Let me know in the comment section below. Thank you so much for watching, and see you in the next video.